Can Quant still hit our long-term price target of $12,000 as the token currently sits around 100? Will the 9.3 million AVAX being unlocked tank the price, even as the Avalanche team has partnered up with AWS to launch their new AVACLOUD platform? And the Chronos Gravity Bridge, which is going to help people bridge assets from the most popular blockchain over to Ethereum, is set to launch in the future. Will this help the Chronos chain re-enter the top 10 blockchains? We are going to talk about all of that and more in today's daily market update. What is up, everybody, and welcome back to the Everything Crypto Show. Now, before we hop into the content, you may be able to tell right off the bat that my sound quality is a little bit off. That's because I am not in my regular recording setup. I will be back there tomorrow. However, there is just too much information that I did want to get to you guys in today's video. So we're going to move forward with this daily market update, starting off with the price action of both Bitcoin and Ethereum, as Bitcoin currently sits at 27.2K, up 1.3% over the past week, and Ether is sitting at 1844, up over 2% in the past 7 days. I was keeping a very close eye on Bitcoin going into the weekly close to see if it could in fact hold the 200-week moving average, and it did, as it was able to close above $26,100. And the 200-week moving average has historically been a very strong area of support for Bitcoin. So when we are below this level, it does essentially mean the crypto market is bearish. And when we are above it, it means the market is bullish. Now, the fact that we did close above it this past Sunday does indicate to me that Bitcoin does want to continue on its move to the upside. And I will be looking forward to potentially make a retest of that April high at $31,000. Now, very similarly to Bitcoin, Ethereum has actually been above its 200-week moving average for quite a while longer than Bitcoin has. However, it did come back to retest the bull market support band sitting at 1730 and did in fact validate it as a level of support. So Bitcoin bouncing off the 200-week moving average and above its bull market support band. Same thing for Ether, actually bouncing off the bull market support band and above the 200-week moving average. Does indicate to me that these two blue chips are going to move higher and most likely bring the rest of the crypto market with it. Now, as the prices move higher for both Bitcoin and Ethereum, one very interesting thing here is how the actual exchange balance has been moving lower. So we can see here, this is actually the Bitcoin balance on exchanges as a percentage of the circulating supply. And you can see that within the first three halving events from Genesis, first halving and second halving, that the supply of Bitcoin on exchanges has only gone upwards. Now, since the third halving here that did occur here, the amount of Bitcoin on these centralized exchanges has actually been moving to the downside, showing you that people are beginning to understand the importance of self-custody and actually owning their keys and owning their own crypto. And to kind of put this into perspective, I do want to zoom in here and give you some more specific numbers on a 3-year basis. The last Bitcoin halving occurred in March of 2020, and we have data from May here, so close enough in my opinion, as the exchange reserve sat at 2.9 million Bitcoin here back in May of 2020. And if we take a look at where it currently sits, that is at about 2.1 million. So effectively, this means that the amount of Bitcoin on exchanges has dropped by about 30% here. And when we actually get over to Ethereum, this decline is even more impressive. So back in May of 2020, there was about 34 million Ether on exchanges, and that is now all the way down to 16 million. So over 50% reduction in the amount of Ether actually available on the centralized exchanges. And this has been noted in this recent article here as the Ether stored on the centralized exchanges hits a 5-year low. So according to the latest data, there is currently, about 16 mil Ether on these exchanges, as we just discussed, 16.1 to be more specific, but still, I mean, that pretty much represents about 15% of Ethereum network's total token supply. And to put things into perspective, the exchange balance was recorded to be around 26% of the total token supply during the 2021 bull market. Such a trend here is typically deemed bullish, as it means that the supply of the crypto asset available for purchase is limited. And additionally, it means there is not a lot of ETH on these centralized exchanges ready to be immediately sold. Now, the decrease in ETH balances does also coincide with a rise in staking, as we are going to take a look at here with the ETH 2.0 staking contract. And we can see here that as of April 14th, there was about 18.3 million Ether locked in this contract, and that is now up to 23.1 million Ether. The amount of Ether being staked here has pretty much gone parabolic since the Shapella upgrade, which did allow for the withdrawal of Ethereum, some of which has been staked here since November of 2020. So a massive de-risking event for Ethereum, in my opinion. A lot of people were fudding, saying that the Shapella upgrade would not go through. Now that it has gone through, now that people are able to get their Ethereum back, I think more and more people are actually comfortable with staking it. So very nice to see that the amount of Bitcoin on exchanges has dropped by a third, but also very promising to see that the amount of Ether on exchanges has dropped by over 50%. So that is all we got for the market overview and the blue chip news. Now I do want to get into the altcoin segment of this video, starting off with AVAX. So we have an article here that reads AVAX token remains flat ahead of its $130 million token unlock, and more than 9.3 million tokens were unlocked on Sunday, representing 1.2% of AVAX's total supply. They are set to go to the Avalanche Foundation, strategic partners, and Ava Labs, as well as an airdrop. They say here tokens from unlocks are not automatically put to use. It just means the foundation can now use them, but it is at their discretion when and how to use them. AVAX, of course, is the gas to Avalanche's smart contracts ecosystem and also used to secure the blockchain via staking. And we know that, token unlocks do freak people out in general. And that's why it is kind of like a topic of discussion and why we do tend to sometimes see the price of tokens move down in line with these token unlocks. But we're going to talk about this token unlock, why it's actually not a big deal whatsoever, and why in the long term, I do believe this to be very bullish for the Avalanche ecosystem as a whole. Using the token unlocks website, we're going to try and get a better understanding of the AVAX tokenomics and why I actually don't think that these unlocks are going to have a major impact on the price action until the full total supply of 720 million AVAX is in circulation. So we can see here on the website that at the moment there is about 371.29 million AVAX unlocked, with 348.71 million AVAX waiting to be unlocked. This means that there is still about 48% of the AVAX supply that is not yet in circulation. And this gives us a current market cap of 4.85 billion. However, if you account for all of the AVAX tokens, the total supply, this actually puts you at a 10.44 billion fully diluted market cap with that max supply of 720 mil. Now, taking a look at the tokenomics and to put things into perspective, we can see here that at the moment there is once again 371 mil AVAX in circulation, and they plan to have all 720 mil in circulation here by basically late 2030. So over the next 7 years, they are planning to roughly double the amount of AVAX that is currently available on the market. But the one thing that I have noticed right off the bat, and I think this is the biggest thing when it comes to the tokenomics, is that 360 million of this is going towards staking rewards for validators and delegators who are securing the chain. So right off the bat, of that 720 mil total supply, half of that is going out as staking rewards and not exactly being, sent to people on the team, on the foundation. However, even the tokens that are being sent to the team and foundation, I do think are necessary, first of all, for Ava Labs to attract and to keep talent, and second of all, to help build new partnerships to continue building out the Avalanche blockchain. So we're going to talk about partnerships in a second because Avalanche has been very effective at creating some key partnerships with some of the biggest companies in the world. But going back to the staking reward ratio here, I mean, right off the bat, we can also see that from the AVAX that is currently circulating, 250 million of that is being staked at the moment to support the network, meaning that 59% of the circulating supply is currently locked up here for an 8.58% annual yield. Worth noting that if you are worried about the inflation of the AVAX token, staking your AVAX is a great way to offset the inflation. And once again, remember that of the total supply here of 720 mil, half of that is being given to you if you are currently staking your AVAX. Now, speaking of Avalanche and their ability to build partnerships, I do want to talk about the launch of AVACLOUD, the Web3 launchpad for deploying and scaling no-code, fully managed custom blockchains. So we can see here, according to the AvaLabs Twitter, They said that creating your own blockchain gives builders complete control of network customizations, increasing scalability and performance without sacrificing interoperability. But the process can be complex and expensive, and that's where AVACLOUD comes in. With AVACLOUD, businesses can slash both time to market and overhead, launching fully supported networks without the need to hire a robust engineering team. AVACLOUD is already supporting a variety of projects ranging from global enterprises to small teams of Web3 developers. And the AVACLOUD's project suite has four key components. The first one being automated blockchain builder. So using their guided workflow to build fully managed blockchains in minutes, no code, no command lines. Manage validators. So automate your blockchain's validators, deployed, scaled, and managed for you. Be certain your chain is always running perfectly. Comprehensive data tool, so accessing blockchain data for real-time analytics and monitoring and more, and using their API to build applications on your custom blockchains. And last but not least, chain interoperability. Use the power of Avalanche Warp messaging to communicate limitlessly between blockchains in the Avalanche network. AVACLOUD is estimated to have a 95% reduction in the time it takes to build these blockchain applications, as well as an 85% cost reduction. You get no code customization, fully managed deployment, and guaranteed support powered by AWS. And we know that Amazon did partner up with Avalanche back in January to scale blockchain solutions for enterprises and governments, actually offering one-click node deployments through their marketplace. So Ava Labs plans to add its subnet deployment as a managed service to the AWS marketplace, so both individuals and institutions can launch their own custom subnets easily. Subnets are a part of Avalanche's scaling solution that diverts traffic away from the main blockchain and allows projects to stake its native token AVAX while creating their own layer 1 or layer 2 solutions. So Avalanche subnets are the reason that I do think AVAX kind of sets itself apart from every other blockchain, as a subnet basically is going to allow for high scalability and customizability of these blockchains. So subnets are their solution. Instead of forcing transactions to take place on a single shared state, they allow developers to launch and customize their very own blockchains. We can see here that this one subnet creates two more, this one subnet creates two more, etc., basically allowing for infinite scaling of Avalanche. And it's also worth noting that for anybody to create their very own subnet, they also need to become a validator of the AVAX chain, staking 2,000 AVAX tokens to open and deploy their subnet. Once again, in my opinion, very favorable in the bull case for the tokenomics of this project. So overall, I think the token unlock is not a big deal, and I think that clearly Avalanche has shown that they know how to use their tokens and their funding to attract some very big partners like Amazon Web Services over here. Now, I do want to talk about Quant as well, as we are back above the $100 zone, and I do kind of want to just discuss my long-term price target of $12,000. So if you don't think that Quant is capable of a move like this, take a look at its previous history. We can see here that Quant actually tanked about 90% in its first bear cycle and then proceeded to rally 29,821% here all the way up to the previous all-time high of $428. Then from there, it once again tanked 90% down to $42, which we did see here at these bear market lows back in June of last year. This is when I was talking about pounding that buy button, and Quant actually went on a very nice run on that level of about 450% from $42 all the way up to $228 before topping out there last October. Now, basically, what Crypto Nerd here on Twitter is saying is that if Quant is going to mimic this 29,000% move here from $42, that would put it up to a price tag of $12,000. Now, assuming that you think Quant will kind of face diminishing returns in this cycle, let's say that it doesn't go up by $12,000. Let's say that it's up 20% reduced from that $12,000 price target. That still assigns Quant a $10,000 price target per token. And Quant currently sits at $103, so about 100x to that level there if it was to hit 10K. So the point here is that when I say I do believe Quant has that 5-figure price potential, I am not being a moon boy. I am not pumping this project. Based on the tokenomics of this project and the utility, I do believe it has that 5-figure price potential. And to kind of put things more in perspective, we're going to hop over to the coin perspective here and just show you guys exactly what Quant will be capable of in a bull cycle. So let's go ahead and get Quant back on the screen here. And we can see right off the bat that if Quant had Bitcoin's market cap of 530 billion, one Quant would be worth 36.5K, an upside of 350x. So Bitcoin at its current market cap is sitting at just over $27,000. The reason Quant would be worth more than Bitcoin at the same market cap is because Quant has a 14.8 mil supply. Actually, let me fix that here. So one Quant would be worth 35.7K because Quant has a 14.8 mil supply versus Bitcoin's 21 mil, effectively meaning that Quant is more scarce than Bitcoin by about 7 million tokens, more like 6.2 million tokens, more or less. And this again is a massive bull case for Quant, in my opinion, not just the utility that this project has to offer, but also the tokenomics and the scarcity. Even if Quant had XRP's current market cap of, 24.7 billion, this would put one Quant at a price tag of $1,660, while XRP currently sits at, 45 cents. That's because there's 100 billion XRP circulating versus the 14.8 million Quant. And the reason we're talking about Quant right now is because I do believe it's back in a very interesting buying range between $85 and $100. We've spoken about $100 being a very nice trading opportunity for Quant over the past year. First of all, we saw the low there at $42 back in June, all the way up to the 228 high back in October for a nice 450% rally. And then we actually saw Quant hit $100 here back in November, and it was back up to 130 by December for another 30% rally. And then again in the new year, Quant tested $100 once again and ran up to 160 for another 60% rally. So clearly this $100 zone has made for a very clean buying opportunity, but $85 has also made for a nice buying opportunity. In fact, we can see back here in January of 2022, Quant ran from 85 up to 158, a move of 83%. And it's also worth noting that throughout the first bull run for Quant here back in 2021, we can actually see here that Quant actually got rejected at $100. It came back down here to $85 where it got rejected once again. And then once it broke above $85 here in July and broke above $100 in late July, this led to that rally all the way up to $428. So had you bought the breakout there above $100, you could have seen a nice 325% rally for Quant. However, had you bought at $85, it would have been a 388% rally. The point being here is that Quant is once again back in this range that I have outlined with the purple box, and I am keeping my eye on Quant in this range as it has been a very good buying opportunity in the past. Now, this does not mean it has to happen again, but generally speaking, prior history does at least give us an indicator of what might happen for Quant in the future. And based on prior history, I do believe in the long run, this will be a very good buying opportunity for this altcoin, which I do believe has that 5-figure price potential in the future. Now, to wrap things up, we are going to talk about the Chronos chain here as we are awaiting the launch of the Chronos Gravity Bridge. So if we take a look here at the Chronos Bridge, and first of all, let's take a look at the Chronos chain's taking a look at the Chronos Chain's Twitter account, they say, what is the Chronos Gravity Bridge? The Chronos Gravity Bridge is poised to be positioned as the canonical decentralized bridge between Chronos and Ethereum mainnet. The bridge aims to connect Chronos with Ethereum, funneling additional liquidity into the Chronos ecosystem. So at the moment, we can see that this bridge is still under beta, but you can basically get a taste of exactly what it does have to offer here from the UI. You can actually go ahead and bridge CRO from the crypto.org chain to the Chronos chain. It does also currently offer bridging from the Cosmos chain to the Chronos chain. And we are still waiting for Ethereum to basically make its way over to the Gravity Bridge. And this is definitely something we have been covering on the channel for months now, something I do think could potentially help bring a lot of total value locked back into Chronos. And this comes at a time when Chronos definitely needs it. I mean, you can see here Chronos is currently sitting in 11th place amongst all blockchains in terms of TVL at about 355 mil, behind Pulse Chain by about 10 million, and only ahead of its 12th place competitor by 10 million. So very tight race here for Chronos, who has lost, its spot in the top 10. And take a look at Ethereum all the way up here at $48.26 billion worth of TVL. Even if Chronos could attract 1% of the total value lock that Ethereum does currently have, that would be a massive buffer to the TVL on Chronos. And that's why I think they are putting, they are kind of planning to launch this gravity bridge. I mean, for example, this could give you a scenario where you could take something like Ethereum, you essentially lock it into ERC20 and an equivalent CRC20 Ethereum is minted on the Chronos chain. You can then use this Ethereum to interact with different dApps on Chronos. And if you want to move that Ethereum back, the CRC20 version is going to be burned, and you're going to then get that previously locked ERC20 token back into your Ethereum blockchain wallet address. So that is the value proposition of the Gravity Bridge, to actually bridge popular tokens from other chains over to Chronos. And I do think Chronos could definitely use a buffer in TVL at the moment, as once again, it is no longer in the top 10 chains. So hopefully the launch of the Gravity Bridge is successful. And historically speaking, bridges have actually been a major target for hackers. So I'm sure that the Chronos chain team does want to do this correctly to make sure that, the bridge does not get hacked, as I think that would do more harm than it would do good for the blockchain in the long run. So still waiting for the launch of the Gravity Bridge, but hoping to see a ton of TVL flow into Chronos when it does happen, eventually as it does get out of beta and add Ethereum to its list of supported chains. So on that note, if you did enjoy the content in today's video, you know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Monday and an amazing start to your week, and I hope to catch you in the next one. Peace out for now.